What is trading volume? That'll be the topic for this video. So if you are a beginner just getting started in the world of day trading, swing trading, and I've seen this term being thrown around, but you're not actually quite sure what it's referring to and where it's coming from, then this will be a video for you. Now, at the core, volume is all about making a deal.
So do we have a deal?
Deal.
And once this deal is made, that's going to give us information about the volume figure and volume statistics that you will come across, and that as a trader, you certainly need to be considering. So let's go to the virtual chalkboard and I'll walk you through a little bit of an example. So here we have two people that are part of a transaction, right? You can't have a transaction unless you have bare minimum two separate parties, two separate people. So we have Billy and we have Bob. What they're going to try to create a deal over is this apple right here. So like any negotiation, people are going to have their perceptions of value. Billy may think that apple's worth something. Bob may think that it's worth something else. So they need to find some sort of common ground in price to agree upon for that apple. So there's going to be back and forth, but the point here is that there's one apple here. So whenever an agreement is made, regardless of the price for that one apple, and the apple exchanges hands, meaning Billy gives it to Bob for a price, then because there is one apple, that would be considered one in regards to volume, because there's been one apple that has been exchanged of hands. Now let's say there's three apples that they were negotiating, and Billy and Bob reach an agreement for a price, and Bob says, yeah, I agree. So for the three apples, he checks the box and says, I agree. Well, then at that point, the volume number will be 3 because there have been 3 apples that have exchanged hands. There have been 3 apples that have been part of this transaction. So like I said, setting the price aside, the volume has to do with the quantity of the transaction. And that's all it is. How many things have exchanged hands? Now, in the world of the stock market, for example, well, how many shares have exchanged hands? In the world of crypto, how many coins have exchanged hands? So on and so forth. It's just a question of how many. Now, at what price also plays a role in a separate statistic known as dollar volume. That would just be telling you the entire transaction amount, but from a financial standpoint, but just volume in and of itself is telling you the quantity of the transaction. Now, how does this help us or hurt us in regards to being a trader? Well, we want lots and lots of transactions to be taking place. In other words, we want high volume because that means a lot of transactions are taking place. So the more, the better. And this is important to us because, well, when we buy, we want to make sure that eventually we're able to sell, because you can always buy something in the market. But when it comes to, are you going to be able to sell? Well, there's not a guarantee, but a way that you can almost, now there's no such thing as a guarantee, but the way you can make it a high probability that you will be able to sell. Now, whether or not it's going to be able to, you selling for with the price you think you deserve or want to get, that's another discussion. But a way we can bring it very, very, very close to a guarantee is to find high volume stocks or a high volume crypto. High volume just means there's a lot of transactions going on, and because there's a lot of transactions going on, then when it comes time for you to want to sell, there's going to be somebody out there that is willing to buy. So what does this actually look like in the real world of trading? Let me take you and walk you through a little bit of my trading platform. Now, ignore everything except this box over here, okay? Everything else is just going to be distraction for the purpose of this video. But what we want to look at specifically is right here, VOL, which stands for, yes, volume. And that number right there is telling us, well, how many deals, how many transactions have been made. And this is also showing you the deal making process in action. In other words, you have two people. So we have Billy over here, we have Bob over here. And right now the Billies of the world are saying, you know what? I want to buy for $463.82. The Bobs of the world are saying, no, I'm only willing to sell for $463.83. So somebody is going to need to make a decision. Either these people, the Billies, are going to say, you know what? that's fine. I'll go ahead and I'm gonna buy for $463.83. Even though they'd like to buy for $463.82, maybe they decide to buy from $463.83. Or the Bobs of the world are gonna say, you know, I'd really like to sell for $463.83, but okay, fine. I'll just go ahead and sell for $463.82. So this is what is known as the level twos, or the bid and the offer. These people are bidding. They're saying, hey, they're out in the crowd. If you envision an auction, they're out in the crowd saying, hey, I'm willing to pay this price right here. The people here would be up on stage, and they're trying to offer up a selling price for the object, in this case, ticker symbol QQQ. So that's what's going on here. But over here, we have the actual transaction that's occurring. And that's what this number here is representing. Now, my broker, you need to multiply that by 100. So in other words, somebody made a deal that they wanted to buy 400, or they wanted to buy 100, because you remember, you got to multiply that by 100. So they wanted to buy 100 for the price of 463. But this number here then ends up in the overall volume amount. And this all is happening, these deals are happening very, very quickly. So if you've never seen this, depending on how much of a beginner you are, it's gonna probably say, whoa. It's gonna seem very overwhelming, because yeah, it's amazing how fast people are changing prices, how many transactions are occurring. So the main number to watch is up here, and you're gonna notice that this volume number continues to rise and rise, because, well, that just means more and more deals are happening. So right here, see that number increasing? That's because more, and then you see this number over here changing. That is just telling you all the deals, all the transactions, their amounts, the prices that are occurring. And that number is just, crazy amount, crazy quick. I don't remember. I think I was talking about 463.80 something, and now the price is all the way down to 463 in the 60s. So that is how fast things operate from a volume standpoint. So that's all trading volume is, the number of transactions, and it is important to us because the more volume that there is, the more likelihood that we have that we'll be able to not only get a better price when we look to buy, but also just flat out be able to sell, and ideally be able to sell for whatever price we want. But if you have a low volume situation, a situation where there's not that many deals being made, there's not that many transactions happening, well, then you're going to have a lot less chance. You're going to have a lot less flexibility in your negotiating power to try to get yourself a good deal, because, well, there's just not as many people out there that are interested in making a transaction for that particular situation. So I hope this helps. If there are any other questions, please leave those down below. But yes, that is what trading volume is all about.